GM. Daily levels, Tuesday, 7th of May. We got a good day of ETF flows. BlackRock remains notably very, very low. BlackRock hasn't had a day over 50 million in any of this view, so 3 weeks. Fidelity's doing good though. And another GBDC inflow, just 3.9 million. Probably points more towards Grayscale selling, the heavy selling being done, rather than like any flip to bullishness. Again, it just makes no sense for Grayscale to consistently have inflows. It wouldn't even be a bullish thing. Think about it. I mean, it would be bullish for retardation. But why would anybody buy GBDC at 1.5% fees whenever BlackRock and etc. BlackRock and the rest are 0.25% to 0.5%? So, yeah, I don't read too much into that. The more important thing about Grayscale is that outflows have stopped. That's far more important than whether it's inflows or how big the inflows are. So if you just see a bunch of zeros on Grayscale, that's like the best thing. That means the selling's done for now. So back to where we're at here. Look, I think if Bitcoin can continue to consolidate this week, then continuation is the direction you expect initially, right? So I obviously closed my trade this morning or overnight. I'd set an alert at 64k, but I'll talk about that more in trade of the day and what trades I'm going to take afterwards. Because right now we have Bitcoin at the bands and at the 50, and so it's compressed around both of them, and it's chopping at that area. So I don't see this as being very strong. I see this currently as just being a retracement up into the big wick from yesterday, and I see this as unlikely to break out. It took the highs, took the lows of this consolidation here, took the highs up there and a few stops higher up, and is just back to consolidation within the range. I also don't expect it to go like that. I said this yesterday that basically as long as Bitcoin is in this range here, which is now quite a wide range, but essentially if you go to the 1 hour, just everything in from the top here, from this push up into this consolidation, is all basically one accumulation or distribution. It could be either, but I don't think it's really close to being done yet. I think there's probably several more days, and if it does that, if it comes up to here and back to there across, that would make me lean heavily towards higher. If it comes up and sweeps again, that's a lot more like distribution. If it actually comes back down here and sweeps the lows, that's a lot more like a show of weakness, and you expect it to go lower. So the most bullish thing Bitcoin can do is not take the highs, not take the lows for a few days. I'd be pretty confident then we break out. But overall, it's fine. It's exactly at the point where the next move should be pretty significant. And that's an area then where I typically just don't trade unless I'm already in a position that's still valid. So what are we looking at here? Well, this is the 1 minute chart, which just happened to be open, but I noticed right away that this big ramp up of open interest since 3 a.m. this morning, that's 159 up to 163. So that's 4,000 contracts. That's about 250 million of fresh positions that have opened on this little push up here from 62.8 up to 64 where we're at. So price wise, open interest wise, it's up 2.7%. Price wise, it's up 2%. Open interest is outpacing price. Funding rate going from closer to negative more to positive. Spot premium sort of slightly declining. Move being led by futures. The white CVD line is futures. The red is spot. A bit more pushing on perps. So that wouldn't have me full of confidence just yet, but that's a low time frame thing. More important is this entire consolidation, which, as you can see, from the move up, right, from the lows, futures have led this move. That's quite clear, right? You can see the white line, remember, white line is futures. If I zoom in on this here, aggregated volume. If you want to get this, you go aggregated volume on Velo and you change it to cumulative delta. That will give you the CVD for all these exchanges. Binance Perp, Bybit Perp, OKX Deribit. This one, aggregated spot volume, exact same thing, put it to cumulative delta, change the colors, and you'll get spot. So since the lows, this has not been a spot-led rally. How do we know that? Well, obviously, the white being above the red indicates that perps are pushing this. So that's objective, undeniable. There is no disputing that quite clearly. Now, it's not by a massive margin. It's not as if spot is selling heavy. Spot's still rising, but perps have clearly led the push. Also, spot premium since the lows has been declining, meaning perpetuals on balance, even though there's a few spikes back up in spot, on balance, if you take the slope of the trend, the slope is moving away from a spot premium and towards a spot discount. And if you take it from even the here, where the spot premium became really the peak of the spot premium, that was just one spike. But spot premium, in fact, if we visualize this as like a curve, which is probably easier, right? There was actually quite a heavy push towards perps here. Then spot really started controlling it, and then all the way up, as you can see, all the way up, all the way up, all the way up, as you draw the slope along it. Perps have been. Did I put two of those on? No. Perps have been pushing this more. So that's, again, very clear. Open interest. Pretty much sideways, choppy, flat. So no signs of position building. This is all a perp-led, like a perp move in terms of look at the major pushes, both up and down. They're making big impacts on open interest. This doesn't seem to be a strongly led spot market. And funding. Funding from being negative right before the squeeze, which is what you want. This part was absolutely a short squeeze. No doubt, absolute short squeeze. You can see it super clearly. There was a strong spot premium. There was negative funding. And they got squeezed out around that big news event. Then you saw some liquidations. Then the liquidations really slowed down. And then the liquidations stopped here. Barely any. And what started to pick up? Long liquidations. This is set for a reversal. Just by these metrics, it is set for a reversal. And I expect a reversal is potential, right? Now, the big difference is when and to what magnitude. It doesn't mean it will, but don't delude yourself. Again, if you're a price action trader using positioning and flow data, right? Which is basically all I do. This is not a spot-led rally. This is has so far been just a short squeeze off the jobs data on Friday. They pushed us up to 64 with the big resistances. And now we're at 64. Now, if that move, so that's that covered pretty clearly, right? This is not a spot-led rally. Now, if that move then makes the market believe, right? The market thinks, okay, that's a good sign. I want to step in now because Bitcoin has reclaimed the range low and I'm going to bid here because that's my invalidation to get high, to get long, right? They were bearish here. Now the big money's like, well, fuck that. If we can't go below 60, let's get bullish. That's totally fine. You can absolutely see a strong demand come in and push us higher. But what got us here right now is just a textbook squeeze. That's all it is. So you need a new cohort to come in and say, we're bullish, we're getting long. So it's two separate things. It's two different approaches. And because of that, I obviously closed my long, which I'll talk about on Trade of the Day. Rest of the market, as I'll scroll through a little bit here. ETH, just dreadful. Like, people laugh and clown on ETH and stuff, but a weak ETH is a weak alt market. It just is. Why do you think the entire alt market has been weak, apart from Solana meme coins, and a little bit of stuff on Base and AI? All those sectors that did well have no relation to ETH. Base excluded, but it's questionable how much Base chain actually accrues value to Ethereum because it's very small. Like, people talk about Base being a big catalyst for ETH, but I don't really think that that's true because the TVL on Base is 1.5 billion, right? TVL on Base is 1.5 billion. The TVL on Ethereum is 55 billion. Like, people don't... this is just smoke and mirrors. There's no liquidity here. There's a bit. But Ethereum has 55 billion locked on the chain. Base taking 1.5 billion in is not bullish for the price of Ethereum. It's literally like 2% of Ethereum's TVL. It's good. It's provided some decent meme coin pumps, but these are things with $1 million of liquidity, right? So like the misunderstanding of liquidity, I don't know what. I'll try to pick one that's not. Brett. Like everyone knows Brett, right? 300 million market cap, liquidity, 2.6 million. These things are just completely illiquid. It doesn't take much money to move them. So when people try and use Base as a reason for why Ethereum's going to be bullish, you're barking up the wrong tree. Unless Base gets to 10 billion TVL, which it could, by the way. I'm not saying it can't, but I'm talking low time frame daily levels. Ethereum remains weak. That creates a weak alt market. Solana, stronger, but still, as I've drawn here, just in a corrective structure until proven otherwise. Now it's about daily bands might flip green again, which is good. But I'm looking at, and this is why I've been saying the last couple of days, I don't think it's time to short yet. I don't think the rallies are done yet. Because a bunch of these are probably going to trap if they are going to be bearish, right? Solana's got this daily order block above. And I would expect if it is going to be bearish, it pushes above this high because that stops out shorts and induces some breakout longers. And the bands go green. And then that's the trap. We fall back below them. And then it goes lower. Or back to the lows for one more push. Regardless. That doesn't fill me with confidence. This stuff's just ready to roll over. These are charts that, let me try and find you an equivalent. Like there was plenty of charts like this back in August and of last year. And when you look at the market as a whole, it gives a much clearer picture. Let's look at something like AVAX last year. Because really a lot of these are just, it's just too soon. Many of them need quite a bit more. Right, here we go. Look at this here, if I zoom it in. So you have a strong correction or strong sell-off, liquidation. Into the bands, can't reclaim them, drifts lower, right? So obviously no two charts look identical. But the lack of a reaction from SEI so far tells me that it wants to go lower. Now the good news, when you look at that, is that going lower is all it needs to go higher, right? That could be the bottom. Or set up a retest and away it goes. A bit like, now obviously Avalanche went another push lower and another push lower. I don't expect that necessarily because obviously this was during a brutal bear market. This is in a bull market, probably one more, and I don't even think it will rally that much if I'm honest. If I think what's going to happen to SEI, I just think it'll be like drift to the lows, move up, retest the lows. It just needs more time and then it'll go, right? Whatever. The point is, as I look at this, and it's not just SEI, it's also SUI. These are, when you reach a level and there's no reaction, right? There's no reaction. This massive liquidation just caused a standard bounce. Like this is just shorts closing into the bands, rejects through it, and there's just nothing dead. Just bleeding, right? Now this can bottom. And these can be FTRs. We've all seen them. And this can move up from the lows like that. And then it's bullish. But that's not the most likely. The most likely is when you just see weakness, it's weakness. Right? For that to be a rally up, you need the bands to flip and to flip to 50. Like it needs to flip to 50 and then the daily bands to go green. Then you're bullish. But when you keep scrolling through the market and everything is just like this is not strong support, right? This is 1, 2, 3, 4th tap and just hanging around. Like that's going to go lower. Now it might just go lower, people collapse, capitulate, and that's the bottom. We could be really close to the bottom. Could be. Nvidia pushing the new highs, which is obviously helping the AI coins. But just what I showed there, those few coins. That's the problem, right? the majority of the market's just wrecked, dead, which doesn't strike me as time for moon. Obviously, it doesn't affect Bitcoin. Bitcoin will do whatever Bitcoin does. And if Bitcoin drags its way to 70, so will, those alts will rise too. But I'm just looking at a lot of bearish retests coming up, right? As Render hits that liquidity of the April 9th highs up into a strong resistance area here, and there hasn't been a pullback. It's been 1, 2, 3, 4, 5, 6. It's now been seven days green, and you know, maybe Render's going to the moon, but I look at a lot of bearish retests going on here, to be honest. Either like something like this actually doesn't look the worst. Like AJX actually looks alright in terms of how it's building back up. The problem is these are just bear flags when they go like that, right? Goes like that, it's going lower because it's only had one push. Very, 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 very rare does something drop down like that with one push and then just bottom. Now it could, because it's such a big capitulation, I guess. But I would expect that at the very least that low is going to get revisited. So we push up here, everyone gets excited about AI for summer, then it bleeds back down, and then those lows hold, and then it goes again later on. Like that is more so what I see, but I don't know, and I also don't care. Like individual coins tell me that the market's still pretty weak. Like Celestia is just, it looks set to round trip this entire thing. And it won't round trip it, but what it will probably do is go back to that low and not be able to break there, and that'll be its higher low forming. I don't think it'll go all the way back. But Injective, weak. Only because it collapsed so much is it even moving. And so outside of your very few, Arbitrum, again, Arbitrum shouldn't go any lower. It's literally collapsed as far as it can collapse, right? But the problem with those moves is they don't lead to this. It's just came down. Like this is just the start of the bottom for ARB. So it probably has to do one more push like that. Then it has to show some strength. Then it has to retest. Then it has to rise. Right? It has to round out the bottom. You just don't see them V-reverse. It can't V-reverse because if it would have had any strength, it wouldn't have came here in the first place. So this whole distribution, again, time. Let's imagine this is the bottom. 92 days from top distribute to the bottom. At least that again before it can start building back up. At least that. Which puts you into July. So I wanted to look at that, and obviously ETH BTC tells its own story as well. Horrendously weak. Probably, I mean, almost certainly ETH BTC rejection is coming. Almost certainly ETH ETF rejection is coming, given that it's in 20 days or less than 20 days and there's no movement. So that rejection might mark a bottom. That's what a lot of people are thinking. If ETH ETFs get rejected and it has a 10% red candle, that could be the bottom. Could be. But back to Bitcoin, I'm just looking at it in general. This is not that, right? This one was above the 50, above the bands, consolidating. This is chopping at the bands, trying its best to grind higher with a big false breakout above, right? A big sweep of all this liquidity and a big red candle that it can't fill. It's just not bullish. It's, at best, uncertain. And so, with that, I'll show you and talk why I close my... Well, you know why I close my long trade now, but we'll talk about next plans. It's also not a place to be bearish or short, right? It's trapped in this area that I've talked about. It's trapped in between these two levels and trapped around that 64k, as you can see. Big volume level, big volume level, big volume on 3 different time frames. This is the level. So, trade of the day, we'll break that one down.